With rising tensions in the Middle East, the threat of the Strait of Hormuz being blocked, skyrocketing oil prices, and inflation catching up with us, where is our economy headed? Today, we'll analyze the drivers of the current crisis, the link between oil, inflation, and economic activity, and how central banks are behaving facing all this tension, and whether this situation might finally be the push our economies need to accelerate decarbonization. Let's dive in with our chief economist. Hi Philippe, and welcome to this new episode of The Economic Perspective.
Hi Clément.
So Philippe, prices are soaring with rapidly increasing oil costs. Beyond the demand effect from higher gasoline prices, how should we understand the economy's dependence on energy?
Economic development is very dependent on two things. First is innovation, technology, and the other is energy. During the Industrial Revolution, we see that. We have a lot of innovation and we are able to use the stock of energy. At this moment it was coal, after it has been oil. But this is very important. And these two elements are working together to create our long-term development, our capacity to grow. And that's what we have to keep in mind. And when something happens on the oil situation, when price surge or whatever, you have immediately an impact on the on growth, on GDP growth, on inflation, because it changes the equilibrium we had just before. So that's something important. And when you look at the oil price, at every moment you have a surge in the oil price, you have just after that a recession, and usually decreasing of the economic activity. So it's very important, and we have to keep that in mind. We are still very dependent on energy. Even if we are more efficient in using this energy, we need less energy to produce €1 of GDP. But look at what happened with AI. We have large data centers that need a lot of energy. And so we are still in this dynamic between innovation and energy to create our own growth, our own development. That's something we have to keep in mind.
So, what connections can we draw between oil prices, inflation, and economic activity dynamics?
When we look at the environment, when we have a surge in the oil price, we immediately have an impact on the gasoline price. So you as a consumer, you have a change in the balance of your budget. If you are a company, you pay more for your input, and so you have to rebalance your situation. That's what we have to keep in mind. More generally, one point to look at is what has happened during the first oil shock in 1973. At this time, the oil price was multiplied by a factor 4. And so many companies were not profitable anymore because the price was too high. They have to adapt new strategy, and this change in trajectory has an impact on the way they can produce goods or services. And at this moment, you necessarily have a cost associated with that, and usually it's a sort of a recession. That's the first point, just because the balance of the growth equilibrium is changing. And on the other side, when you pay more, when you have to pay more for your gasoline, for your input, you need to adapt your behavior. You will negotiate higher wages if you are a salaryman. You will increase your sale price if you are a company, and so you create a kind of persistent situation. And so that's something we have to keep in mind. Every shock, when it is persistent, and in the first oil shock it was, you have very long impact on the economy.
So if we dive a bit deeper, what are the drivers of the current crisis?
This crisis is specific for 3 points. One, because the crisis is in the Middle East, where the world produces fossil energies, oil and gas. At the same time, many countries there, from Iran, from Qatar, etc., produce some fertilizer, some products that is linked, that are linked to oil or gas, and so we are very dependent on what's happening there. That's the first point. The second point is that Iran is managing the Strait of Hormuz, and it can create shortage in the way we use this energy. If the strait is closed, we will no longer have tankers of oil or gas in the world. That's a real issue. It's not that important for the US or for Europe, but for Asia, it's a major issue. And that's the third point. China, India, Japan, or South Korea are very dependent on energy coming through the Strait of Hormuz. And so if there is a shortage for them, it will have a strong impact of their capacity to grow. And as this region, Asia, is the main source of impulse for GDP growth at the world level, it will have an impact for everyone, from Europe to the US. So that's the three major points we have to keep in mind, and that create the specificity of this crisis.
Investors fear the reaction from central banks, as higher inflation rates risk leading to more restrictive monetary policy. How should we approach this situation? What about long-term interest rates?
What is important here is the duration of the crisis. If it's a short-lived crisis, we will have a surge in inflation, but it will not be persistent. And so in that case, central banks can maintain their current strategy. The main issue is what will happen if the crisis has a long duration. If the price of oil is at a very high level for a long-term period. In that case, they will have to act. Because if they do not act, if central bankers do not act, investors will anticipate inflation in the future. And we will have an inflation premium on long-term bonds. So if we imagine that the crisis will not stop tomorrow morning, central bank will have to tighten their monetary policy to flatten the yield curve in order to say to investors, we will manage inflation during all this crisis, and you don't have to put a premium on long-term bonds. This strategy was a strategy of the Bundesbank, the German central bank, in the 70s during the first oil shock. In France, in the US, in the UK, central bank strategy accommodate with the shock, and they say we have to support the demand to limit, etc. Germany said no, we have a real issue in terms of inflation. We will tighten our monetary policy now. Probably it will have an impact on growth, but in the long term, the inflation rate will be lower and the inflation premium will be lower. And that's what we've seen. In France, from the end of 72 to the end of 83, the average annual inflation rate was at 11%. It was at 4.9% in Germany. And the premium, the spread between German and French treasury bonds was so wide. So for the German economy, it has had an impact in the short term, a recession that was deeper than in France, but in the long term, interest rates were much lower and it was very good for companies. My guess is that if the crisis is longer than what we can expect, central bank will have to act very rapidly and probably very strongly to limit the risk of inflation from investor side.
So in the end, isn't this crisis a tremendous incentive to decarbonize our economies and increase renewable or nuclear energy?
After the energy crisis in 2022, we have had a surge in renewable energies in Europe. Solar, wind, etc. We had very important investment. So in 2025, electricity in Europe will produce more through renewable energy than through gas. That's very important. 10 years ago, it was the contrary. So we can have this type of behavior now. We clearly have an energy crisis. We have to improve this situation, and it will increase our autonomy in Europe. Decarbonization is another source of autonomy for Europe. If we depend less on fossil energies, we will increase our autonomy, our capacity to decide for ourselves. And that's something that could be very, very important for Europe. And my guess is that that's something that will happen, and it will be fruitful for everyone in Europe.
Thank you, Philippe, for these insights, and see you soon for another episode of The Economic Perspective.
Thank you, Clément.